Elon Musk's recent meme tweet has sparked a lot of discussions. The message seems clear: there's a looming risk of devaluation for the US dollar. This warning isn't just about fiat currencies losing value. It also subtly nods to the importance of tangible assets. In the meme, there's a silver dollar, an important detail that resonates with us, especially those who understand the enduring value of precious metals. Silver, as we know, is not just a commodity but real money. Unlike fiat currency, it can't be debased through reckless spending and the accumulation of enormous debt. It's a hedge against inflation, a safe haven in uncertain times, and a crucial component in various industrial applications, from solar panels to water purification. But today, we're going to pivot a bit and talk about another critical metal that Elon Musk has highlighted: nickel. You might wonder, why nickel? According to Musk, nickel supply is his biggest concern when it comes to scaling battery production for electric vehicles. The average EV battery contains about 29 kilograms of nickel. For Tesla's Cybertruck alone, fulfilling just the 1 million pre-orders would require over 880,000 tons of nickel. To put this in perspective, the average nickel mine worldwide produces around 42,000 tons per year. The math here shows a potentially significant supply shortfall, especially as the demand for electric vehicles continues to skyrocket. Currently, about 65% of global nickel consumption is used in stainless steel production. However, the use of nickel in batteries is on the rise, now accounting for roughly 15% of demand. This percentage is expected to grow significantly as the world transitions to green energy solutions. But here's the kicker: the US imports 100% of its nickel. This reliance on foreign sources presents a significant risk, especially considering the geopolitical landscape. The majority of the world's nickel production is concentrated in Indonesia, a country within China's sphere of influence. This dependency makes the supply chain vulnerable to disruptions, especially in an era of increasing protectionism and deglobalization. The U.S. Department of Energy has recognized this vulnerability, ranking nickel as one of the most critical energy metals. This designation underscores its essential role in energy technologies and the high risk of supply chain disruptions. Now, let's talk about the opportunity this situation presents. As nickel becomes increasingly crucial, safe and reliable sources of the metal within the United States could become highly valuable. One company that's caught our attention is Alaska Energy Metals. Their Nikolai project boasts substantial nickel resources, with over 4.2 billion pounds in inferred resources and 3.9 billion pounds in indicated resources. Located in a resource-friendly jurisdiction, this project could become a key player in the future nickel market. Comparing Alaska Energy Metals with its peers like Canada Nickel reveals an interesting disparity. Despite having significant nickel resources, Alaska Energy Metals' market capitalization is much lower. This undervaluation suggests potential upside for investors, especially as the demand for nickel grows. For those of us deeply interested in gold and silver, why should we care about nickel? The answer lies in diversification and the interconnectedness of the metals market. As we've seen with precious metals, commodities like nickel can provide a hedge against economic uncertainties. Moreover, the increased focus on green technologies and the energy transition could create a robust demand for industrial metals, alongside traditional precious metals. So, what's the takeaway? Whether you're stacking silver and gold or exploring new opportunities in industrial metals like nickel, staying informed and diversified is key. As always, do your own research and due diligence before making any investment decisions. That's it for today, folks. Stay safe, stay informed, and keep stacking. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more content. See you next time. Nickel has been used historically in coinage and as an alloying element. Its durability and resistance to corrosion made it valuable long before the rise of the EV industry. Nickel prices can often act as an economic indicator. Rising prices may indicate increased industrial activity, while falling prices can signal economic slowdown. As the world moves towards sustainable energy solutions, The demand for nickel will likely increase, especially for battery production in EVs. However, it's essential to consider the environmental impact of nickel mining and refining. Investors are increasingly considering the ethical implications of their investments. The environmental and human rights issues associated with nickel mining, particularly in certain regions, are critical factors to consider. Advances in battery technology, including nickel-cobalt-aluminum NCA and nickel-cobalt-manganese NCM batteries, could drive demand. These technologies offer higher energy density and longer lifespans. There is ongoing research into alternative sources and recycling of nickel to reduce dependency on primary mining. This could become a significant factor in the market dynamics. In times of economic uncertainty and potential currency devaluation, central banks and investors often turn to gold and silver as safe havens. Nickel, while not a traditional safe haven, could play a role in diversifying assets, especially in portfolios focused on the industrial sector. Countries are increasingly aware of the strategic importance of securing a reliable supply of critical minerals. The US and other nations may move to build strategic reserves of nickel, similar to how they handle strategic oil reserves. Ongoing trade tensions and sanctions could further complicate the supply chain, making it vital for companies and investors to seek secure and ethical sources of nickel.